Matthew Radgowski is the Chief Operating Officer, Global Investment Management Group at Morningstar. Matthew will be addressing the sales and marketing track at TSAM. Matthew, you're going to be talking about the big topic of opportunities and challenges for technology solutions around regulatory change. Now, regulatory change is wide. What are some of the areas you're addressing in your presentation?
Sure. Specifically on the regulatory front, UK in particular, in terms of individual investors' control over their assets in retirement, whereby in the past, investors were essentially forced into some annuitization schemes, whereas now they have greater flexibility and control over their assets and how they actually spend down those assets in retirement. With obviously control comes challenges and opportunities in terms of investment planning and advice tools that actually can help them make the best decisions for their facts and circumstances, their retirement vision for themselves.
So Matthew, what would you say are the biggest opportunities? And with the opportunities always come challenges. So what are the big opportunities and challenges to help the institutions address themselves to aid their clients? And I'm also going to ask you later after that whether there are different models and precedents, but first about the opportunities and clients.
Sure. So on the opportunities front, the technology and data itself really allows us to create an integration of three areas of the investment advice delivery process that had commonly been separate and distinct. Investment and financial planning, right? So taking inputs from the individual, developing a roadmap and plan for that individual's retirement, commonly delivered through financial planning and advice software tools. Investment management, right? So the actual implementation of that strategy, whether it be in a managed portfolio setting or elsewise, again, often commonly delivered in a separate, distinct platform or program. And then finally, the investor communications. Right, so taking the experience of that individual, communicating them with on an ongoing basis around their progress towards retirement, their ability to succeed in retirement. Those things, again, were commonly very separate and distinct. The technology-based solution allows us to wrap all of those into a single solution that, again, meets the needs of that investor. More specifically, it really allows for a personalization. Right, so with the technology and the scale that comes with it, we can take data around that individual, their savings, their financial circumstances, their desires in terms of retirement income, their need for security, right? Their tolerance for risk in retirement can be measured and influence the advice that they receive. It can be iterative, right? Their circumstances change over time. It allows them to test out those strategies, see what impact they would actually have on the advice itself. As we gather data around a wealth of investors, right, a greater population of investors, it actually allows for the solutions to become predictive, right? We can take that data and say, individuals in a similar circumstance have commonly made or acted in a way that's detrimental to their success in retirement. And so we can begin to be predictive and guide those individuals back on track, stick to their plan, and again, increase their likelihood of success in retirement. On the challenges front, yes. Right, I think the biggest challenge that is present in these types of solutions is confusing sophistication, right, and complication. And so you can have very sophisticated underlying investment methodologies delivered in a way that's very intuitive and, quite frankly, easy for the investor. Applications are commonly developed today by financial experts, right? Those in the financial industry with that background that really, again, the common investor just doesn't have. And so creating solutions that are more simplistic, right, for that individual, again, will help achieve success in retirement. Now, that doesn't mean that you can't lead them along the way to gather more information and data and really drive for a greater degree of sophistication as they move through their planning life cycle. But again, that shouldn't be confused with complicated process. They really need to be adaptive as well. So as we look to render solutions, guidance, and advice, we need to make sure that we're rendering the right advice at the right time for that investor. And really what I mean by that is young investors, right? They're not looking at retirement. Retirement for them is something they really just can't vision or comprehend. And so we should be focused on them as savers. Right? They first need to learn to save for retirement, and then they become investors. So things like developing emergency funds, right? Start there, basic savings match, in the case of the U.S. market 401k match, making sure that they recognize there's actually money there for the taking, right, that creates a savings. So really making it adaptive. As they grow and move through their investment life cycle, as they move closer towards retirement, things like data aggregation become very important, right? So making sure that we see all of the holdings, right? Both those that are advised in this specific setting, but those that surround it as well, so we can make better quality advice. And also then begin to weave in this notion or concept of focusing on retirement distribution and drawdown. Not, again, early on when they're 25 to 35 years old, but as they move towards that pre-retirement setting, begin to change that mindset and framework for them, to make that advice very relevant.
And from your experience, are there precedents or models that can demonstrate this from other markets?
Sure. In terms of the markets that are most relevant, I think the U.S. retirement market is a great example of using technology-based solutions to meet the challenges of investors. Back in the early 2000s, the Department of Labor gave some guidance to asset managers in the U.S. retirement space that allowed for them to provide advice recommendations and actual discretionary management to retirement investors or participants, but these advice recommendations needed to be serviced or offered through an independent financial expert, right? So an independent party that built up the technology-based solution. And again, we've seen an increased traction in those solutions and use of them in the U.S. And again, I think it's very relevant for the markets here.
Okay. And can you perhaps isolate for us a few examples of the key ingredients for developing ongoing relationship between solution providing institutions, their advisor clients, and the end investors, for examples across the retirement and post-retirement boundary?
Sure. In terms of the relationships, I think starting with the solution provider to the advisor, which is very important. I think the most important aspect of that is to vest the advisor in the process itself. Right? So making sure that a solution is developed that allows for certain touch points along the way. They know that investor better than you or I ever could, right? They understand the behaviors of that individual, the motivations of them, how they react to certain situations. And so allowing them to be part of the process, I think, is absolutely critical to make, again, that advisor a supporter of that advice solution. Going back to the U.S. retirement market, one of the challenges that the early solutions faced was that essentially the solution providers leapfrogged those advisors. And many advisors, again, were, I'll say, skeptical, right? But also they felt challenged by those solutions. And so integrating them into the process, I think, is absolutely critical. And that can be done, again, in a very scalable way. You don't want to lose scale with those touch points, but you can find the appropriate points along that life cycle to make sure that advisor is part of the process. As you move from the advisor then to the individual investor, I think it's very critical that the individual can actually see retirement as a vision of retirement. Again, there's commonly, in tools that are provided, essentially a ledger, right, that talks about their asset growth, their distributions over time in a very, in a very ledger-oriented way. And I think investors can't vision their retirement through that. And so you have to, again, make sure that this is looked at by them as a very strong continuum, right, of needs. Early on, again, they're savers, providing advice that helps them manage those responsibilities and challenges they face then. As they move into that, the next stage of their life cycle, seamlessly weave things like college planning into the solutions again. So it's not a stop and start along the way. It's a single continuum that this advice solution provides guidance and solutions for. And then again, as they move into their pre-retirement and into retirement phase, start to change the dynamic of the language that's used, the communication that's used, to begin helping them see, all right, it's a reality now. Retirement is here. But again, it's not a big stop and start. It's a point along this advice cycle that we've gotten them very comfortable with along the way. And so it's a natural, again, it's a natural and seamless movement, again, from their pre-retirement into the retirement. Again, that with that guidance is certainly hope to be more successful.
Right, that makes a lot of great content. We look forward to seeing you at TSAM, Matthew.
Thank you very much.